We put out a YouTube video on Sunday night because this became so evident that we were heading for a reversal in the market indexes based upon the simple technical parameters that candlestick analysis provides. First of all, the stochastic showed this market was in an oversold condition. It was amplified by the fact that they were gapping it down in the oversold condition. Remember the simple uh, verbiage or trading adage of the Japanese rice traders. Where do most people sell? They panic sell at the bottom. When you start seeing gap downs in the oversold area, start looking for a reversal. One more major factor made this clearly evident that a reversal was coming. First of all, the Dow did a hammer doji type signal, an indecisive reversal setup. And look how far away they are from the T line when it was done. Any positive trading today or a positive open today would have been an alert that the reversal had occurred, so investors could have been buying immediately, knowing that the probabilities were pretty strong. They are heading back up eventually to the T line. The rhetorical question, did you know it could be such a big, huge day? Not necessarily, but at least you know that once you were buying, the probabilities were that the bulls were stepping in and it was heading positive, not knowing what the magnitude of that strength might be. The Nasdaq formed a meeting line belt hold signal on Friday. Note where it opened. Gap down well away from the T line and immediately started trading positive and closed right about where it closed the previous day and going in this direction. That meeting line, especially in the oversold area and that far away from the T line, was also a confirmation that if things opened positive today, you wanted to be buying immediately. What was the first likely target? Back up here to the T line. Is this a major reversal or is this just a bounce? We won't know that until we get up to the T line and see what investor sentiment does at those levels. It doesn't matter whether those signals are for the market indexes or individual stocks. Notice what happened in Apple. Basically the same thing as the Nasdaq. Gapped way down, closed at the same level, opened positive. Where was the first likely target? Back up to the T line, and as you can see, Apple closed well above the T line today. But the most important factor was that if you saw this setting up and knowing what the results could be, an aggressive trader could be buying calls or buying the stock going into the close with the expectation that if it opened positive, you were going to have good profitability. Our recommendation on Rite Aid was based upon the pattern setup. Notice how you have a fry pan bottom that bounced right off the 50-day moving average, a pullback. Now you're, whether you want to call it a classic, which is a fry pan bottom followed by a J-hook pattern, or you want to call it a cup and handle, it doesn't matter. You could see the piercing signal, bullish confirmation over the last 3 days, and remember what's happened over the last 3 days in the market. Strong selling, yet Rite Aid was showing strength. The classic pattern is much more expressed in our recommendation on ZYXI. The fry pan bottom bouncing off the 50, the pullback, and notice where the pullback occurred. Right smack dab to the T line. They open it positive on Friday, do a doji, bullish confirmation. What's the pattern now? There's your J-hook pattern. What's our expectation? Wave 1 and wave 3, especially if they break it out through this level, wave 3 will be the same as wave 1. This is not rocket science, as I often keep repeating. This is just recognizing what human nature does to create patterns that can be exploited time after time for not only high probability trade setups, but knowing what the upside potential of each trade will be. That'll be it. We'll see you in the chat rooms.